Welcome to our deep dive today. It's all about real estate investing.
Oh.
We're going to be looking at the beginner's guide to real estate investing.
Okay.
And the goal is to help you guys figure out how to build wealth through property.
Sounds good.
Even if you don't have a ton of cash to get started.
Exactly.
So one of the things that this book really dives into is the mindset you need to succeed.
Right.
Because I think so many people have these limiting beliefs around real estate investing.
Absolutely.
So how does this book help challenge those assumptions?
Yeah, for one thing, it tackles some of those common myths.
Okay.
Like the idea that you need perfect credit or a mountain of cash to even get started.
Right.
Which is totally not true.
Yeah, that always feels like the biggest hurdle.
Right. It's like this exclusive club that you can't get into unless you already have money.
Right.
So the book challenges those assumptions head on.
Okay, good.
And it gives you practical steps that you can take to overcome those hurdles.
Now, another myth that I hear all the time is that real estate is only a good investment when inflation is high.
Right.
So how does the book address that?
It flips that idea completely on its head.
Okay.
It shows you that even in a low inflation environment, there are ways to win.
Like what?
Like refinancing at lower interest rates.
Oh, that makes sense.
Or taking advantage of those market dips to snag properties at a discount.
Right.
So it's all about being adaptable.
Okay.
And spotting those opportunities.
So it's about being proactive.
Exactly.
Not reactive.
Yes.
Okay, I like that.
It's about creating opportunities instead of just waiting for the quote-unquote perfect time.
Right, because there's never going to be a perfect time.
Exactly.
So we're shifting our mindset. We're seeing the possibilities. What are some of the paths to wealth that the book lays out?
Okay, well, it's not just about buying a property and hoping it goes up in value.
Right.
The book goes way beyond that.
Okay.
It dives into a whole range of strategies. Yeah. One that I found particularly interesting is called serial home selling.
Serial home selling?
Yeah. Have you ever heard of that?
No, I don't think so.
Okay, so it's basically about using the capital gains exclusion on your primary residence to build a real estate portfolio.
So I'm taking advantage of the tax benefits.
Exactly. And you can do it essentially tax-free.
Cool.
Up to a certain limit, of course.
That makes sense.
But did you know that you can actually trade up your home every 2 years?
And keep the profits.
Yeah, and keep the profits tax-free.
Yeah. Seriously?
Yes.
That's amazing.
It's a game changer.
Okay.
Right.
Yeah, I had no idea.
A lot of people don't.
So it's not just a place to live. It's a potential stepping stone to building wealth.
Exactly.
That's really cool.
And then there's the whole creative financing angle.
Okay.
You know, one of the biggest hurdles people face is thinking they need a ton of cash up front.
Yeah, for sure.
But this book dives into some techniques that require very little or even none of your own money to get started.
Okay, how's that even possible?
So have you heard of seller financing?
I'm
not sure.
Okay, so basically, imagine you're buying a property. But instead of going to a bank for a mortgage, you negotiate with the seller to carry the mortgage themselves.
So the seller becomes the bank.
Exactly.
Wow.
And oftentimes you can get better terms than you would from a bank.
Really?
Yeah.
Like what kind of terms?
Like a lower interest rate.
Okay.
Or maybe a more flexible payment plan.
Oh, that's interesting.
It can be a win-win for both the buyer and the seller.
Wow.
And it opens up possibilities for people who might not qualify for a traditional loan.
That's incredible. It's like the secret passageway into real estate investing.
It is.
Okay, so I'm loving these strategies. I feel like we're embracing the right mindset. We've got creative financing strategies.
Yeah.
But now the question is, how do we find those hidden gem properties?
Especially in a competitive market.
Okay, well, the book has some great tips for that.
Okay.
One area it highlights is foreclosures and REOs.
Foreclosures and REO.
Yeah. Okay. So these are properties that have been foreclosed on.
Okay.
And the lender is often eager to get them off their books, which means they're often willing to sell at a discount.
So that's where the opportunity lies.
Exactly.
For those of us who aren't real estate experts, can you just break down exactly what those are and why they might be good deals?
Sure. So a foreclosure happens when a homeowner can't keep up with their mortgage payments.
Okay.
And eventually the lender takes possession of the property.
Right.
Now, sometimes these properties are sold at auction.
Okay.
But if they don't sell at auction, they become REOs.
REOs.
Which stands for real estate owned by the lender.
Okay.
And because the lender is now motivated to sell, they're often willing to offer a discount.
Right.
Just to recoup their losses and move on.
So it's all about knowing where to find these properties.
Yeah.
And recognizing the opportunity.
Exactly.
It sounds a bit risky, though.
It can be.
Are there any downsides to buying foreclosures or REOs?
Well, there are definitely things to watch out for.
Like what?
Well, for one thing, you'll want to get a thorough inspection.
Okay.
Because you're usually buying the property as is.
As is.
So you need to factor in any potential repair costs.
Right.
Which could be substantial if the property has been neglected.
So due diligence is key.
Absolutely.
Don't just jump in blindly.
Oh, you got to do your homework.
Okay, what other strategies does the book suggest for finding those diamond in the rough properties?
Well, one tactic I absolutely love is called driving for dollars.
Driving for dollars?
Yes.
What is that?
It's exactly what it sounds like.
Okay.
You hop in your car.
Uh-huh.
You drive around neighborhoods that you're interested in, and you look for vacant properties or any signs of distress.
Distress, like what?
Like a boarded up house or an overgrown lawn or maybe a for sale by owner sign.
Okay.
These could all be clues that the owner might be motivated to sell.
So it's like a real life treasure hunt.
It is.
For real estate deals.
That's a great way to put it.
I love that.
It's a fantastic way to find off-market deals that haven't even hit the listings yet.
I like that. And speaking of being proactive.
Yes.
The book talks about running your own every lever. Wanted to buy ads in the classifieds.
Absolutely.
Why is that a good strategy?
Well, because that way you're attracting motivated sellers.
Right.
Who might be open to negotiating.
Okay.
It's about taking control and being the hunter.
Right.
Not waiting to be hunted.
I love that. Okay, so we found a potential property.
Yeah.
We're feeling good about the numbers. We're ready to make an offer.
Okay.
But how do we avoid overpaying?
Right. That's a great question.
Yeah, how do we make sure we're getting a good deal?
The book really emphasizes understanding market value.
Okay.
And a lot of people think that's just whatever Zillow or Redfin tells them.
Right.
But there's a lot more to it than that.
So how do we determine true market value then?
Well, the book lays out 5 criteria for a true market value transaction.
Okay, what's the first one?
Okay, so first, the property needs to be exposed to the market for a reasonable amount of time.
Okay, so no rush sales.
Exactly. No fire sales.
No pressure.
No, it's got to be a level playing field.
Makes sense.
For buyers and sellers.
What else?
The second criteria is that there can't be any unusual financing terms skewing the price.
Okay, so for example, like a super low down payment.
Exactly. That could inflate the perceived value.
Okay.
It's about finding that sweet spot where both the buyer and seller feel like they're getting a fair deal.
Right. Like it's a win-win.
Exactly.
For both parties.
Yes.
Okay. So we're doing our due diligence, understanding market value,
right?
Making sure everything is above board. But let's talk about actually making money from these properties. Okay. Beyond just appreciation. What are some ways to generate cash flow?
Well, the book goes beyond just hoping your property goes up in value.
Right.
It dives into strategies for creating cash flow from day one.
Okay, give me an example.
One key concept it emphasizes is rent optimization.
Rent optimization.
Yes, have you heard of that?
I'm not sure I have.
Okay, so it's basically making sure you're charging the right rent for your market.
Okay.
If you're charging too little, you're leaving money on the table.
Right.
But if you charge too much, you risk scaring away good tenants and ending up with vacancies.
That's a delicate balance.
It is.
How do we find that sweet spot?
Well, the book offers some really helpful tips. On researching your local market. Analyzing comparable properties. And setting competitive rents that will attract quality tenants.
Right, because we want to make sure we're attracting those good tenants.
Exactly.
Okay, so we're bringing in rental income. Yeah. But obviously owning a property comes with expenses.
Of course.
So how do we make sure those expenses don't eat into our profits?
That's where the book's emphasis on analyzing a property's cap rate comes in.
Cap rate?
Yeah, the capitalization rate.
Okay, break that down for me. I'm not a real estate mogul.
Okay, so think of the cap rate as a quick way to compare the potential profitability of different properties.
Okay.
It's essentially a measure of how much income you can expect relative to the property's value.
Okay.
So a higher cap rate generally means a better potential return.
Okay, so it's something we definitely want to be paying attention to.
Yes, definitely.
What about renovations?
Yeah.
Does the book talk about ways to improve a property and increase its value?
Absolutely.
Okay.
It talks about making strategic improvements that attract higher paying tenants or buyers.
So not just like cosmetic upgrades.
Right. It's about making improvements that actually add value to the property.
Okay, that makes sense.
For example, if you're in an area with a lot of families.
Adding an extra bathroom or finishing a basement could significantly increase your rental income.
Right.
Or your resale value.
I see. So thinking about what the market actually wants.
Exactly.
Not just what we personally might like.
Yes.
All right. So we're generating cash flow. We're making smart renovations.
Yeah.
But being a landlord sounds like a lot of work.
It can be.
Does the book talk about how to manage properties effectively?
It does. It actually gets into the nitty-gritty of being your own property manager.
Is that really advisable?
It can be a lot of work.
Yeah.
But it also gives you more control.
Okay.
And the potential to save money on management fees.
That makes sense.
The book provides guidance on everything from attracting good tenants to handling maintenance requests efficiently.
What really stood out to me was the advice on crafting tenant-friendly leases that still protect your interests as the owner.
Absolutely.
Is that even possible?
It is. It's all about finding that balance.
Right. And the book offers some great tips on how to do that.
Okay.
From setting clear expectations up front to including clauses that cover things like rent payments, late fees, property maintenance. It's really comprehensive.
Wow. That's a lot to think about.
It is.
So we're attracting tenants.
Yeah.
We're managing properties. We're maximizing cash flow.
Right.
But what if somebody is really strapped for cash?
Yeah.
Are there still options for getting started in real estate investing?
Absolutely. The book dedicates a whole chapter to this.
Okay.
Highlighting techniques like owner-occupied buying strategies.
Owner-occupied?
Yeah.
What does that mean?
So imagine this.
Okay.
You use a low down payment loan program, like an FHA loan, to buy a multifamily property.
Okay.
You live in one unit.
Okay.
And rent out the others.
So you're essentially house hacking your way into real estate investing.
That's a great way to put it.
Wow.
And because you're living in the property, you can often qualify for better loan terms.
That's amazing. I've heard of people doing that.
Yeah.
But I never realized it was an actual strategy.
It's a legitimate strategy.
Okay, cool. What other low cash options are there?
Well, the book also mentions leveraging the power of FHA's 203K program.
The 203K program. Remind me what that is.
Sure. So that program is designed for properties that need renovation.
Okay.
And it allows you to wrap the cost of those repairs into your mortgage.
Oh, wow.
So you don't have to shell out a ton of cash up front.
That sounds amazing.
It's a great option.
Especially for somebody who's handy.
Exactly.
Or willing to learn.
Or willing to hire someone.
Right, exactly.
On his.
So it's like you're getting a renovation loan built right into your mortgage.
Yeah, pretty much.
I love that. What about VA loans?
Yes.
Are those ever an option for investment properties?
They can be.
Okay.
VA loans can be used to finance multifamily properties. As long as the veteran owner occupies one of the units.
Okay.
It's another way to potentially get into real estate investing with a lower down payment.
Wow. There are so many options out there.
There are.
I love that.
It's exciting.
Yeah. It's inspiring to see how accessible real estate investing can be.
Yeah.
Even for those with limited capital.
Absolutely.
But let's be realistic for a moment.
Okay.
Even with all of these creative strategies, doesn't good credit still play a role in getting financing?
It does. Good credit is essential.
Right.
And the book really stresses that strengthening your credit power is key.
So if someone is thinking about dipping their toes into real estate investing, what are some practical steps they can take to improve their credit score?
Well, the book covers all the basics, like paying your bills on time, keeping your credit card balances low.
Okay.
But it also goes deeper into understanding how credit scoring works.
Interesting.
Like, did you know that having too many credit cards,
even if you don't use them, can actually lower your score?
I did not know that.
It's true.
Wow. Okay. So it's not just about avoiding debt.
Right.
It's about managing your credit wisely.
Exactly.
Okay, what if somebody has some blemishes on their credit report?
Yeah.
Like a late payment or two.
Mm-hmm.
Is it a hopeless situation?
Not at all.
Okay.
The book provides guidance on how to address those blemishes.
Okay.
And improve your overall creditworthiness.
Good.
It's about taking ownership of your financial history.
Yeah.
And making positive changes.
So it's not about being perfect. It's about being proactive.
Exactly.
And taking steps to improve.
Yes.
That's really encouraging.
And that proactive approach is woven throughout this entire book.
Good.
It's about taking control of your financial future through real estate investing.
I love that. It's not about getting rich quick.
No.
It's about building a solid foundation and making smart decisions.
It's a long-term game.
Right.
It's a marathon, not a sprint. Well, this has been incredibly insightful.
Good. I'm glad.
I'm feeling a lot more confident already.
Awesome.
About real estate investing.
Yeah.
And we've only just scratched the surface.
We have. There's so much more to cover.
Right. We haven't even dived into negotiating with sellers or the legal aspects of buying and selling property.
Yeah.
But this has definitely given me a solid foundation and a boost of confidence to start thinking about real estate investing more seriously.
I'm happy to hear that.
So this is just the beginning of our deep dive
Absolutely.
into real estate investing.
Stay tuned for more.
Yes. Definitely stay tuned for more insights and actionable advice.
Absolutely.
In the next part.
It's going to be good.
Okay, so we've talked about mindset creative financing, even finding those hidden gem properties.
Right.
But let's get down to brass tacks. How do we make sure we're not overpaying for a property?
Yeah, that's a great point.
Yeah.
You know, emotions can run high when you're caught up in the excitement of a potential deal. That's where the book's emphasis on negotiating like a pro really comes in.
Okay, so how do we become expert negotiators?
Well, it starts with understanding the seller's motivations.
Okay, their motivations?
Yeah. Why are they selling?
Right.
What are their pain points? Are they looking for a quick close, or are they more concerned about getting top dollar?
So it's like trying to see the situation from their perspective.
Exactly. It's about stepping into their shoes for a moment.
Okay.
And once you understand their motivations, you can tailor your offer to address their needs.
That makes sense.
It's about finding common ground and creating a win-win situation.
Not just trying to win?
Exactly. It's not about being adversarial.
Right.
It's about building rapport and finding a solution that works for everyone.
Okay, so we're keeping our emotions in check. We're understanding the seller's motivations.
Right.
But how do we actually negotiate the price?
Well, the book offers some really helpful tips on that.
Okay, like what?
For example, it talks about the importance of making a strong first offer.
Okay.
One that shows you're serious, but also leaves room for negotiation.
So don't be afraid to lowball a little bit.
Within reason, yes.
Okay.
You never know. The seller might be more motivated than you think.
Right.
And even if they counter, you've started the conversation and established your position.
Okay. What about financing terms and contingencies? Are those things we can negotiate as well?
Absolutely. Everything is negotiable.
Yep.
For example, if you're getting financing, you might negotiate for the seller to cover some of the closing costs. Or you might include a contingency that allows you to back out of the deal if the inspection reveals major problems.
So it's about thinking outside the box a little bit.
Exactly. It's about being creative and finding solutions that work for both sides.
I like that.
Yeah.
So just to reiterate, everything should be in writing.
Absolutely.
Right.
Everything should be spelled out clearly.
Okay.
From the purchase price to the closing date to any contingencies.
And it's always a good idea to have an attorney review the contract.
Oh, absolutely.
Before you sign.
Yes, definitely.
Okay, so we've found the deal.
Yeah.
We've negotiated like pros.
Uh-huh.
We're ready to close.
Okay.
What happens next?
All right, so the closing process involves finalizing all the details of the transaction.
Okay.
From securing your mortgage to transferring ownership of the property.
It's kind of complicated.
It can be.
Yeah.
But the book breaks it down step by step.
Okay.
Walking you through the entire process.
Okay.
It covers things like getting your mortgage approved.
Right.
Securing any necessary insurance.
Okay.
And working with a title company.
Yeah.
To ensure clear ownership.
So are there any common pitfalls that we should watch out for?
Yeah.
During the closing process?
Well, the book highlights a couple of things to keep in mind.
Okay.
Like unexpected fees or delays.
Okay.
For example, make sure you understand all the closing costs associated with the transaction. and factor those into your budget.
No surprises.
Exactly. Nobody wants any surprises at the closing table.
Right. Speaking of being prepared.
Okay.
We talked earlier about foreclosures and REOs as potential investment opportunities. So can you walk me through how those actually work?
Sure. So remember, a foreclosure happens when a homeowner can't keep up with their mortgage payments.
Right.
And the lender takes possession of the property.
Right.
The book breaks down the foreclosure process into 3 stages.
Okay, what are those 3 stages?
So the first stage is pre-foreclosure.
Pre-foreclosure.
Yes. This is when the homeowner has fallen behind on their mortgage payments.
Okay.
But the property hasn't been optioned off yet.
Okay, so there's still a chance for the homeowner to catch up.
Exactly.
Or work out a deal with the lender.
Exactly. And for savvy investors, this can actually be an opportunity to negotiate directly with the homeowner.
Right.
And potentially purchase the property before it even goes to auction.
I see. So you're kind of catching it before it falls through the cracks.
You got it.
Okay.
But it's important to do your due diligence here.
Right.
You want to make sure you understand the terms of the existing mortgage.
Right.
And any other liens on the property.
Right. We don't want to inherit somebody else's problems.
Exactly. You don't want to inherit any financial surprises.
Okay, so what happens if the homeowner can't catch up on those payments?
Then the property moves to the second stage, which is the foreclosure auction.
Okay,
Yeah, this is where the property is sold to the highest bidder.
So it's like a bidding war.
It can be.
Yeah.
But the book cautions that you need to be prepared going into an auction.
Okay, how so?
You often have to pay in cash.
Wow. Oh.
And close very quickly.
So there's no time for like financing contingencies?
Exactly. No, there's no time for that.
Or inspections?
Not really.
Wow. So you're really taking a risk.
It is a higher risk strategy.
Okay. What happens if the property doesn't sell at the auction?
Then it moves to the third stage, which is the REO stage.
REO stage?
Yeah, REO stands for real estate owned.
Okay.
And it means the property didn't sell at auction and now belongs to the lender.
So the bank owns it.
Exactly.
And they probably just want to get rid of it.
They do. They're usually eager to get it off their books.
Okay.
And this can be a good opportunity for investors.
Why?
Because lenders are often more flexible on price and financing terms.
Okay.
You know, they just want to recoup their losses and move on.
It sounds less stressful than the auction.
It can be, but again, due diligence is crucial.
Right, always.
You want to get a thorough inspection, assess the property's condition, and factor in any potential repair costs.
Okay, so we've got foreclosures and REOs.
Yeah.
What other unique sources of deals does this book recommend?
Well, it mentions short sales.
Short sales?
Okay.
What are those?
So a short sale happens when a homeowner owes more on their mortgage than the property is worth.
Okay.
And they're trying to sell it for less than they owe.
I see.
With the lender's approval.
So the lender's taking a loss.
They are, but it allows the homeowner to avoid foreclosure.
Right.
Which can be really damaging to their credit. And their financial future.
So it's kind of a win-win?
It can be.
For the homeowner and the investor?
Yes. The homeowner avoids foreclosure.
Right.
And the investor gets a property at a discount.
Okay.
But short sales can be a little bit complex.
Okay, how so?
They can be time-consuming.
Right.
You're dealing with both the homeowner and the lender.
Okay.
And there's a lot of paperwork involved.
So you need some patience.
You do. You need patience and persistence.
Okay.
But if you're willing to put in the effort, short sales can be a really lucrative strategy.
We're finding those below market deals.
Exactly.
All right, so we've got our potential deal. We've done our research. How do we make sure that we're not overpaying?
Okay, well, the book stresses the importance of running the numbers.
Okay.
You need to go beyond just looking at the asking price. You need to dig deeper and analyze the property's income potential, its expenses, and its cash flow.
So it's not just about how much it costs.
Right.
It's about how much money it can potentially make.
Exactly. And the book provides some helpful tools and formulas to do just that.
Okay, like what?
For example, it introduces the concept of net operating income.
Net operating income or
NOI?
NOI.
Yeah.
Break that down for me.
Okay. So NOI is essentially the property's income after you deduct operating expenses.
Operating expenses like what?
Like property taxes, insurance, maintenance, utilities.
Okay.
It gives you a clearer picture of the property's profitability.
So that's the money you actually get to keep after paying the bill.
Exactly. And then there's the cap rate.
Right.
Which we talked about earlier.
Yes, the cap rate helps us determine the property's market value.
Exactly.
Down to its income.
Based on its income, and a higher cap rate generally means a better potential return.
All right, so those are definitely things we want to pay attention to.
Absolutely.
So by using all these tools and running the numbers, we can hopefully avoid overpaying.
You got it.
Okay, so we're crunching the numbers, we're analyzing cap rates,
right,
making sure the deal makes financial sense. But what about the bigger picture? Should we be thinking about future trends and how those might impact our investment?
Absolutely. The book really encourages us to think about the future, not just the property's current state. It suggests we try to anticipate future trends.
Future trends like what?
Like population growth, job creation, neighborhood development.
Yeah, those things can definitely impact a property's value over time.
Exactly. And the author suggests looking for properties in areas that are on the upswing, where there's potential for appreciation.
Makes sense. So like if a new tech company is moving to town.
Exactly. That could drive up demand for housing.
Right, and boost property values.
Yeah.
Okay, so it's not just about finding a good deal today.
No.
It's about making a smart investment that will hopefully pay off in the future.
That's the goal.
This is all starting to make sense, but I have to admit, running all these numbers and analyzing trends can feel a little daunting.
It can be a lot to take in,
yeah,
but the book breaks it down step by step.
Okay, good.
And it provides a lot of real-world examples.
That's helpful.
Yeah. It's all about empowering you to make those smart decisions.
It's like having a real estate mentor guiding you through the process.
That's a great way to put it.
Okay, so we've found the deal. We've run the numbers like pros.
Yeah.
We've navigated the tricky world of negotiation.
Right.
Now what?
Now it's time to roll up our sleeves and dive into the world of property management.
Bring on the tenants. Okay, so we've tackled finding those deals.
Right.
Negotiating like pros. And now we're ready to step into the world of being landlords.
The exciting world of landlording.
I'm a little nervous, to be honest.
Understand.
It just seems like there's a lot that could go wrong.
Yeah, it can be a little daunting.
Yeah.
But, this is where the book really shines. It gives us a practical roadmap for navigating all the ins and outs of property management.
So where do we even begin?
Well, it all starts with attracting good tenants. The author really stresses that this is one of the most important steps.
Yeah, I can see why that would be so crucial.
It really is. Think of it as laying the foundation for a smooth and successful rental experience.
I mean, I can only imagine a bad tenant can lead to just all sorts of headaches.
Oh, absolutely.
Missed rent payments, damage to the property, even legal disputes.
Yeah, it's a landlord's worst nightmare.
It really is.
So that's why the book dedicates a whole chapter to this, developing a really solid tenant screening process.
So walk me through it. What does that actually involve?
Well, it starts with the basics. Running credit checks.
To assess their financial responsibility.
Exactly. You want to verify employment history.
Right. Make sure they have a stable income.
Exactly. And contacting previous landlords to get some insights into their rental history.
Okay, so it's like a background check.
It is.
For potential tenants.
It is. And you're really looking for any red flags that might indicate potential problems down the road.
Like what? Give me an example.
A history of late rent payments. Evictions, things like that.
Yeah, we want to avoid that.
Yeah, for sure.
So the lease agreement itself.
Yeah.
Any advice on how to craft one of those?
The book goes deep on that.
Good, because it seems really important.
It is. It's like the rule book for the landlord-tenant relationship.
I like that, a rule book that everybody understands and agrees to.
It's important for both sides.
Yeah, so the book actually provides some sample lease clauses.
It does.
That we could adapt to our own needs.
Absolutely.
Covering all kinds of things, rent payments, late fees, pet policies, property maintenance, even things like noise levels and guest policies. So it's really comprehensive.
It is. It's designed to be really thorough.
So it's not just about protecting yourself as the landlord, but it's also about creating a harmonious living environment for the tenants.
Absolutely. It's about finding that balance.
Makes sense, because happy tenants are more likely to renew their leases.
Exactly.
Which means less turnover for us as landlords.
Less turnover, fewer vacancies. Yeah. Which is good for cash flow.
Right, exactly.
So it all ties together.
Okay, so we've attracted some great tenants. We've got our lease agreement in place. What about just like the day-to-day stuff?
Yeah, the day-to-day grind.
Yeah, like maintenance requests and rent collection.
Right. Well, the book really emphasizes the importance of being a responsive and responsible landlord.
What does that look like in practice?
So that means, responding promptly to maintenance requests.
Okay.
Addressing any issues that arise quickly and professionally.
Okay.
And being proactive about property upkeep.
So it's just like being a good communicator and taking care of the property.
Exactly.
Treat it like you would if you were living there.
Right. It's about creating that positive relationship.
Yeah.
With your tenants.
Absolutely.
Hopefully to avoid those problems down the road.
Minimize problems for sure.
Okay, but let's be realistic. Sometimes, even with the best tenants, things come up.
You do.
Like late rent payments, noise complaints. How do we handle those?
The book gives us some good guidance on that.
Okay.
Establishing clear procedures for things like rent collection.
Okay.
Setting up timely reminders.
Right.
And addressing any late payments promptly and professionally.
So it's about having a system.
It is.
In place and then just following through.
Yeah, don't let things slide.
Don't let things slide. Okay. What if things escalate?
Uh-oh.
And we're dealing with a truly problematic tenant?
Yeah.
Does the book cover the dreaded E word?
Eviction?
Yes.
It does.
Okay.
It emphasizes that it should be a last resort.
What?
Right, of course.
But it does provide a step-by-step guide to the eviction process.
Just in case.
Just in case.
Perfect.
You're not left in the dark.
All right, so we've covered attracting tenants, screening them, crafting solid leases, handling the day-to-day stuff.
Yeah, the ups and downs of property management.
Right. What about the fun part, making money?
Okay, yeah.
Does the book offer any strategies for maximizing that rental income?
It does. It encourages us to think like entrepreneurs.
Okay, I like that.
Constantly evaluating our properties and looking for ways to improve their appeal and their profitability.
So tell me more.
So it starts with understanding those market trends.
Okay.
And making sure you're adjusting rents accordingly.
Right. We want to stay competitive.
Exactly.
Attract those quality tenants.
We don't want to leave money on the table.
Right.
But we also don't want to overcharge.
Right. It's about finding that balance again.
Exactly.
Does the book talk about renovations at all?
It does.
In this section.
Yeah, it talks about making strategic renovations or upgrades that can attract those higher paying tenants.
So like we talked about before, maybe adding an extra bathroom.
That's a good one.
Or finishing the basement.
Yeah, those are good examples.
To appeal to families.
Exactly. It's about thinking like a tenant, what do they value?
Okay.
And then making those improvements.
Right, and hopefully that justifies higher rents.
Exactly.
Okay, good. I like that.
And, the author even encourages us to get creative.
Okay.
Think about converting underutilized space into rental units.
Oh, like a garage apartment or something.
Yeah, exactly. Like a garage apartment or a finished basement suite.
That's brilliant.
It can be.
It's like finding these hidden income streams within our existing properties.
That's a great way to think about it.
Okay, wow. This has been an incredible deep dive.
It has.
We've gone from feeling intimidated by this whole world to feeling like empowered and excited about the possibilities.
That's the goal.
And I think that's what the Beginner's Guide to Real Estate Investing really does.
Yeah.
It demystifies this whole process.
It does.
And gives you the tools and knowledge to succeed.
Hopefully.
It's like having that roadmap.
It is. It's a great analogy.
To navigate this sometimes complex world.
Yeah, there are a lot of moving pieces.
Right. And now I feel like I have a better understanding of all those pieces.
Good. I'm glad to hear that.
So for anyone listening out there who's ready to take that next step, what's the one piece of advice you'd leave them with?
Believe in yourself, do your research, and don't be afraid to take action.
Love it. Well, thank you for joining us on this deep dive into real estate investing.
It's been my pleasure.
We hope you've learned some valuable insights today and are feeling inspired.
Yeah, get out there and make it happen.
Exactly. So until next time.
Happy investing.